Greetings, dear students. I hope you are taking good care of yourself. Today, we will be starting with Unit 4, that is Accounts of Insurance Companies, from the subject Company Accounting 2. Before we begin with Accounts of Insurance Companies, let's have a brief understanding about insurance. Insurance is one of those things we all should have, but hope we will never need. Insurance is basically a promise of compensation for specific potential unexpected loss, the loss which is uncertain and which the loss is not intentional. It should not be deliberate. So periodic payment of premium is paid for this to protect this risk, protect financial well-being, and basically it is a contract between insured and insurer. These are two parties. Insurer agrees to pay the policy holder upon occurrence of specific event. When we talk about insurance, it includes certain factors like it should have risk involved, nature of property to be insured should be clearly defined, contents of the property should be mentioned, occupancy hazards, exposure hazards, and time element. These are major factors which need to be considered for insurance. So, insurance, from our understanding, it is group of same risk individuals who agree to share the loss. The risk is common for all these individuals, so they are grouped. Risk is spread in bearable small losses. Occurrence of event is random or accidental, but it should not be deliberate. See, all these factors and features which we have just discussed, some of the slogans of the companies also reflect those, like कल पर कंट्रोल, करो ज़्यादा का इरादा, जियो बेफिकर. These are those slogans which reflect that yes, companies are there to protect. So, definition in financial sense, it is a social device where group of individuals insured, risk is transferred to another party, that is insurer, the company, in order to combine loss experienced, which permits statistical prediction of losses and provides for payment of losses from funds contributed, and these funds are contributed in terms of premium by all members who transfer risk. So that is why we said it is group of same risk individuals who agree to share the loss. In legal sense, it is a contract, one party insurer, consideration is paid in the form of premium, proportionate to risk, provides security to another party, that is insured, and he shall not suffer loss, damage, or prejudice by happening of certain specific events. Insurance is meant to protect insured against uncertain events which may cause disadvantage to him. These are elements of insurance. Elements are basically categorized under three factors, three elements. So, when we talk about elements of insurance, it is basically the risk, that is insurance as a transfer system, and the premium part, that is insurance as a business, and it is a contract, so insurance as a contract. These three elements, that is transfer system, business system, and contract. We will be discussing it in detail. Transfer system, as we discussed, that risk is transferred to insurance companies, and this insurance companies is financially sound and has capacity and willingness to take the risk. A loss exposure can give rise to three types of losses. On the basis of these losses also, insurance policies are named, or we can say classified: property loss, liability loss, human and personal loss. We will discuss later when we will talk about classification of insurance. Next is insurance as a business. It primarily attempts to meet its cost and expenses from premium that it earns, and also make a reasonable margin of profit for its own sustainability. This how companies earn profit. They can further invest the premium collected from the parties in another companies, and hence they will generate interest or dividend. Other benefits to the society are payment for the cost of covered loss. Society will get this. Reduction of insured financial uncertainty, efficient use of resources, support for credit. Insurance also helps as a collateral for any credit, depending upon the amount of insurance and the requirement of credit. Satisfaction of legal requirements, satisfaction of business requirements. Insurance helps in investment funds for infrastructure developments. The amount collected in the form of premium are further invested by insurance companies, and these investment can be these investments are utilized for infrastructure development. So this is how money revolves. Reduction of social burden. Next is insurance as a contract, which we have earlier also discussed when we were discussing the definition of insurance. So an insurance policy is legally enforceable contract, and we already know that contract needs an offer and acceptance, consideration, which is premium. In the monetary form of consideration is herein premium, capacity, and legal purpose. The purpose of insurance should be legal. The property should be legally owned by the person. So, for our accounting purpose, we will be dealing with life insurance and general insurance. Basically, business of insurance is divided into two parts, that is life insurance and general insurance. Life insurance, as the name suggests, that it provides money to the insured or specified beneficiaries upon events such as death or accident. So periodic premiums are paid monthly, quarterly, whatever is the condition. And the risk covers premature death, income during retirement or illness. Next is general insurance. When we talk about general insurance, it is basically an insurance policy that protects you against losses and damages other than those covered by life insurance. So these other risks can be property loss, if car is stolen or house is burned, liability arising from damage caused by policy holder to a third party. See, in this picture, it depicts that how life insurance works. You pay certain amount in the form of premium over a certain time. Insurance companies, on the event of death of the person, provides that amount on annuity calculation to the family members. And this is general insurance category. Like we discussed that motor insurance, when car is stolen or any accident and any damage on the car, then insurance company will pay if insurance is done for that particular vehicle. Health insurance, these days insurance companies are providing COVID-19 insurance also, fire insurance, marine insurance, crop insurance, travel insurance, home insurance. These are certain categories where general insurance works. We will further discuss it in detail and we will talk about classification of insurance in part 2. Thank you.